Good morning, and thank you for joining the National Housing Finance and Investment Corporation's first research webinar, Employment, Housing Demand and COVID-19. At last count, we had over 400 participants, which is a great effort for NHFIC's first webinar today. This morning, I would like to acknowledge NHFIC's board and Chair Brendan Crotty. Today's agenda includes a presentation from the demographics groups Bernard Salt and Simon Kuestenmacher, followed by a Q&A where Bernard and Simon will be joined by NHFIC's Head of Research, Hugh Hartigan, and Lead Researcher, Shane Lee. Please send your questions through the chat function, and I'll put these to the panel after the presentation. I would now like to hand over to NHFIC's CEO, Nathan Dalbon.
Thank you, Tori, and welcome everyone to our first research webinar. I wanted to briefly provide a little context around NHFIC and our research agenda. For those who don't know NHFIC, we are a relatively new Commonwealth Government organisation focused on improving housing outcomes, particularly for affordable housing. NHFIC's mandate was recently expanded by the government to include a research function, which started this year. Australia has a strong housing research network in existence. NHFIC's role is to generate new research and complement the important work that others are doing. In particular, NHFIC's ambition is to strengthen the link between housing research and policy outcomes across all levels of government. Today's webinar is an example of promoting this link through dialogue and an exchange of information. Since the government's decision regarding a new research function, NHFIC has established a small expert research team and are delivering a range of products, including short targeted papers and a flagship State of the Nation housing report due later in the year. Our first short paper looked at the role the residential construction industry plays in generating jobs and growth across the Australian economy. Our latest report, released last week, examined the potential impact of COVID-19 on Australia's population and housing demand, and found that the current pandemic could cut underlying dwelling demand in Australia by between 129,000 and 232,000 over the next 3 years, mainly due to the downturn in net overseas migration. Also this year, NHFIC's role expanded to include the administration of the Australian Government's first home loan deposit scheme, which commenced in January. In August, the research team released a report exploring the trends and insights into first home buyers who access the scheme during its first 6 months of its operation. I'm pleased to welcome Bernard Salt to this webinar, who has been working with us to further explore the impact of COVID-19, particularly on employment and housing demand. Welcome, Bernard.
Thanks so much, Nathan, for that introduction, and thank you also to NHFIC for the invitation to actually do this work, both Simon and myself as part of the demographics group. My presentation looks at the mega trends shaping the way Australians will live in the 2020s. Initially, when the pandemic started, I thought that this was going to be a bit of a blip, March, April, May perhaps. My position has changed. I do think that this is a significant shift in the way that the Australian people will live and organise their cities, and certainly even impact the shape of housing going forward. I want to start by looking at the way in which an event can change culture and behaviour and thinking in a very short period of time. And I need to go back to, in fact, to the 1910s. I got this photograph of the internet. And it shows a very fashionable middle-class couple promenading in 1915. This was the world that the diggers left to go to Gallipoli, of course. And you can see the fellow there with a top hat. And it's almost like a hangover from the 19th century that sort of moved into the 20th century. And then, of course, we had the Great War, First World War. We lost 60,000 diggers in Australia. And also that was followed up by the Spanish flu, where we lost 15,000 people. So 5 years of absolute hell during the following decade or so. And you think, well, what do the 2020s look like? Here is another perspective just 10 years later. And this is a photograph of Douglas Fairbanks, silent movie star Douglas Fairbanks, and his wife Mary Pickford. They are late 20s, early 30s. And immediately you can see that the top hat has gone and in has come the casual boater. You can see a joie de vivre about these people just 10 years later. And my point here is that if you have been through calamity, if you've been through calamity on a global scale, then when you get the opportunity, when you feel that the danger is past, you will want to celebrate life. In fact, look at the cut of his suit. You could almost wear that suit today. Maybe that's a reflection of my fashion sense. But again, very casual, very modern, very happy. And of course, if you look at the social movements in the 1920s, I don't know if you've ever seen the Charleston dance danced. That is a celebration of life. Jazz music became popular at that time, and there was an entrepreneurial energy that was connected to this era. Commonwealth Serum Laboratories was founded in Australia, in Parkville, in Melbourne, in 1916. Qantas was founded in 1920. Woolworths, one of the 10 biggest businesses on the Australian continent today, was founded in 1924. My point is that after calamity, after the deluge, there can be recovery, there can be happiness, there can be a great era of entrepreneurship and creativity. And I also think that that applied at the end of the Second World War as well. Australia lost 39,000 diggers in the Second World War. And in the post-war era, late 40s, early 50s, there was an era of great intercontinental migration. People wanted to escape war-torn Europe and to find safe haven, safe harbour, a refuge, if you like. That was Australia's role in the 1920s. That was Australia's role in the 1940s and especially in the 1950s and beyond. And I think the lessons there are that we can again, I think that we will actually fulfil that same role in the latter part of the 2020s. There was also a strong entrepreneurial energy that came with that immigration program. If you think in terms of property, Frank Lowy, the founder of Westfield, arrived in Sydney in that migrant inflow. And a Dutch immigrant by the name of Dick Dusseldorp founded a business in Sydney in 1958 called Civil and Civic. That business today is called Lend Lease. A period of great opportunity for Australia. Out of global calamity, Australia, the evidence shows, in my opinion, that Australia ultimately prospers and is seen as a place of opportunity, a place of aspiration. Not immediately, not in the thick of it, but in the years following that. And again, it comes to this bigger picture question that I have. Do you have faith in the future of Australia? If you are an investor, if you're a developer, if you are going to put your life, your career, your family's assets on the line, then you will want to know that the prospects of Australia recovering from this and actually doing better, perhaps in the latter part of the 2020s, is, I think, by the evidence, quite logical. You would want to escape war-torn Europe or contaminated Europe, and or Asia for that matter, or anywhere, and come to Australia. So the fundamental proposition I have is that, do you have faith in the future of Australia? And I say, yes, you should have, because of this evidence. Here is a chart that was actually published about 3 weeks ago when the June quarter GDP figures were announced, and your eye will go immediately to that decrease of 7 percentage point on the right. It shows quarter by quarter the GDP change from, in fact, 1970 on the left, so it's 50 years of economic history. And you can see the ups and downs, the ins and outs. You know, the parents of the baby boomers were quite used to good times following bad. You know, you should be very cautious in terms of how you manage your finances, because you never know what's just around the corner. You can see that writ large in the recessions that we had at quite regular intervals in the 1970s and the 1980s and even into the 1990s, the last one being 91, 92, where at a quarterly level, the biggest decrease was a 2 percentage point decrease. We are already at 7 percentage points in this recession. But I want to focus your mind on the interval between 1991 and 2020, almost 30 years of unbroken prosperity. And while that's good for Australia and Australians and our prosperity and our wealth, and we've converted that into housing, There is a double-edged sword to this. I think that actually creates a culture of almost outrageous expectation. We are no longer happy or satisfied with a caravan holiday to the Coolangatta Caravan Park. We want a Jetstar holiday to Bali. We have upped the ante. How we expect to live has been formulated in this 30-year crucible, if you like, of every year being better than the next, than the last at a national level. And I think that that has an impact on the shape of housing, on the kind of housing, which I'll get to in just a moment. Let's move forward to the pandemic and look at how work has changed. Interestingly, I've been tracking the work from home phenomenon for 25 years, literally from the 1996 census to the 2016 census. The proportion of the Australian workforce that worked from home never varied between 4% and 5%. So that, when we've gone from dial-up to 5G, it's still only 4 or 5%, 1 in 20 workers who work from home. Then along comes the pandemic and we have mandatory lockdowns. And I reckon at its peak, I'm coming to you from Melbourne, still locked down in Melbourne, I reckon at the peak maybe 45%. You can't have 100%, of course, because there are probably half the jobs you cannot do at home. And it raises the question of what proportion will this move back to? Will it go back to 4 to 5%? And I say no. I say it'll go back to maybe 10% or 15%. And this is the major cultural shift that I think is going to reshape the narrative of Australian life and change Australian housing. If I'm wrong and it goes back to 4 or 5%, then we just, this has been a blip. But I don't think that is the case. And for every extra 5 percentage points, it's another 600,000 workers. So in the model that I'm suggesting there, which is a 15% of workers working from home in the future, that is 1.8 million workers, that is 1.2 million workers not working in the city, not commuting, not demanding office space, not demanding whatever else space it is. So it has a major impact on the demand for commercial property, and it has an impact on the demand for housing, the kind of housing you would need if there is a step change in the proportion of the workforce working from home. I want to show you one other piece of information from the 2016 census, and it shows the proportion or the number of people working from home at the last census. So there's no pandemic, and these are people just working from home, and this is by skill level, by age. So it's 15 years old on the left through to 75 on the right, and the skill level shows the level of sophistication or training in the skills of labour. So the lowest skill level is skill level 5. That might be a labourer or a cafe worker. A cafe worker can't work from home. A labourer can't work from home. They've got to go to the site. And then you move up through the hierarchy of skills and training and education until you get to skill level 1. And I would imagine that most people on this call are actually in skill level 1. Skill level 1 has, this is the domain of skill. These are high paid workers who can work through a computer screen. That is the bottom line here. And when the pandemic comes, you've got 45% of workers working from home, it is skewed towards that workforce who would otherwise work largely in a CBD office. That is the bottom line. Let's move on to see how that has transferred into housing. Here is how he lived in the 1950s. This is the parents of the baby boomers founded these houses. This is the Quarter-acre block, the 3-bedroom brick veneer. This is the dream of Australian suburban life. A.V. Jennings, this is Daryl Kerrigan's dream, if you like. 3 bedrooms, 1 bathroom, mum and dad, 4 kids, dad works, mum's a housewife. You have 1 good room at the front where you entertain guests and suitors. Suitors never got near a bedroom back in the 1950s. Here is 60 years later, 70 years later, here is how we lived today after 30 years of outrageous, unbroken prosperity. And the size of the block is halved. It's not 1,000 square metres, only 500 square metres, but it is 4 bedrooms, not 3 bedrooms. It's 2 bathrooms, not 1 bathroom. It's 2 income earners, not 1 income earner, and it's 2 kids, not 4 kids. This is where our wealth has gone. We Australians showcase our prosperity through our homes, through our living environment, and guests are actually brought right through the through the house, past the open doors to the bedrooms, which means the bedrooms now need to be glimpse perfect. So you've had the pillowification of the bedroom, and then you mill around an island bench. You have the real cooking done in a pantry, in a butler's pantry off to the side, and you have the gooseneck tap, you have the Italian marble, the whole thing. This is where we showcase wealth and prosperity, not in a parlour. The home as a showcase, if you like, as well as a for living. But this has changed, I think, with the coming of the coronavirus. If both workers work from home, then maybe you can sell one car and turn the garage into a gym. Many people have a gym in the garage anyway. And the home office can't really be a bit of a place where you stick the laptop and, you know, send a few emails. If you are actually there taking calls, taking Zoom calls, then it needs to be more sophisticated, more highly developed space, a bigger space. It must accommodate 2 workers, perhaps, plus teenage kids as well. I've called this the home office broadcast outlet, the hobo space. I'm not sure that the home construction industry is going to latch on to my marketing term, the hobo space. And then out the back, the real kitchen is, cooking is done in the real kitchen. Butler's pantry becomes a storage facility, perhaps for toilet paper. Out the back, you can see water tanks. That is a legacy from the Millennium Drought. These things hang on and shape the house for decades later. I think the legacy of the coronavirus will be a veggie patch, and that will continue into the future. When you look at this, the home is bigger. You need more space. If you're going to work from home, shop from home, study from home, if you're going to be entertained at home, then that needs to be bigger. And the premium value would shift from an inner city studio apartment to that inner middle ring of suburbs, that first ring of suburbs where you have backyards. That is the shift that I think is going to occur in the 2020s, largely driven by millennials who are now pushing to mid to late 30s. They've got 1 kid, 2 kids, and you kind of need to push in this direction as well. And it's the millennial generation that I think is going to lead the charge, saying, I ain't going back to the office. I'm not going to do what my parents did or father did, primarily, commuting an hour in the morning and an hour at night every day of his working life for 40 years. I think the millennials will want this model. If there's one common denominator I have come across, no matter which data set I look at, there's one common denominator that I think defines Australian behaviour, and that is the relentless pursuit of lifestyle. It took us to suburbia. It took us to that inner city Manhattan-esque cafe lifestyle over the last 10 or 15 years. And I think it's going to take us to work from home. That is the shift. And then when you think that through in terms of how that's going to reshape housing in the city, here is, I wrote a column on this in my Weekend Australian magazine column on the weekend. I said that Australian cities, Melbourne, Sydney, Brisbane and Perth primarily, evolved as fried egg cities. So you have the rich creamy yolk where all the cool jobs and the hipsters live, maybe 5K radius or so. Then you have Middle Australia spreading out in every direction. And the issue is that you've got to get suburban workers to city jobs. And we are forever chasing our tail, trying to build trams, trains and automobile infrastructure to make that happen. What is required, I think, is a fundamental flip of the fried egg, and you come up with this arrangement. This is the 20-minute city. I can't claim it as my own idea. Of course, town planners have been banging on about this for 20 years. I think they nicked it from the Paris strategic plan around the year 2000. I think in the Australian iteration, it'll end up being a 30-minute city. Live, work, play, recreate, go to university, go to hospital, be entertained, all within the local area. And it changes the value of property, changes the shape of property, changes the demand for residential property in those middle distance suburbs, especially the inner middle distance suburbs, especially. So I think that this is certainly the way in which it's almost like the pandemic has been a break point where it's a circuit breaker. So we're letting go of the old ideals and reaffixing a new model to take us through the 21st century, not just in work, but how we live our lives is the point. My key points. There will, of course, be a short-term drop in the rate of population growth caused by a decrease in overseas immigration. I would see that recovers in the medium term. So decrease 2020, 2021, recovers 2022, 2023, something like that. An eventual restitution of Australia as a safe haven for skilled migrants. I think skilled migrants will see Australia as a place of opportunity and a place that is good sanitation, well managed. We might not think that at the moment, but that's what I think we will be seen as, like the 1920s, like the 1950s, but with a 2020s makeover, if you like. Then, of course, this work from home. My grand prediction that 10 to 15% of the workforce will work from home will be tested, of course, at the 2021 census to be held in August of next year. It is the question that will be asked, and in about August of 2022, we'll get the results. So that's the first figure I'll be looking for. And if I am right, I will let you know. And if I am wrong, I will just never mention the topic ever again. But I'm pretty sure that there is going to be a step change in the proportion of workers working from home. And that means the home becomes bigger, the home office becomes more sophisticated, and that inner middle ring of housing will become highly prized. And then, of course, the third observation is that whichever way you look at this, I cannot see a way that you would build a case for the CBD to hold the primacy that it held prior to the coronavirus. It'll still be the dominant workplace. It'll still hold corporate head offices, still be the centre of a city, if you like. But the gap between the CBD and the suburbs will close, will diminish, will be reduced in that point. There'll be fewer visitors, fewer students, fewer office workers, I think. Certainly, maybe most workers will go back to work, but I can't see that all will go back to work. 10% of them or whatever it is are going to say, you know what, this is a better way of organising my life, or our life, in fact. And as a consequence, this could have implications for office space on the periphery of the CBD, and what to do with that is, of course, a major issue. Social cohesion ultimately is where we need to be focused on as a people in the short, medium, and long term in the 2020s. And with that, I'll pass back to Thierry, I think, to introduce Simon.
Thanks, Bernard. And now we'll hear from the Demographics Group's Head of Research, Simon Kuestenmacher. And just a reminder, please put your questions through the chat function. Thank you.
Thank you very much for having me. I will continue on to, with Bernard's topics, and I'll talk in particular about the drivers of housing decision making. So what we've done in this research is we grabbed all of the academic research into housing decision making, put it all into a bag, and then decided what, in our opinion, the 5 most important steps are. And it's quite interesting when you think about how property businesses think about housing decisions and housing marketing, how many of these steps are quite often overlooked. The first step when you make a housing decision is, in general terms, a very simple decision. Should I move or should I not move? This decision is being driven, being impacted by push and pull factors. A pandemic, for example, quite clearly pushes us away from areas that we think are dangerous, where we think we are more likely to actually catch the virus. And of course, areas that are seen as safe, they pull population. In the long term, Australia will most likely be seen as an area that is actually pulling people, that is seen as a safe haven, even though here in Melbourne, we are of course still in lockdown. But in a global consideration, we're managing our numbers really well. So this should speak in favor of attracting population in this basic push-pull logic. Once people made a decision, where should I move to, or should I move, should I not move, then we don't actually have a house that we want to move to. We first have some sort of rough understanding about the broad location that we are wanting to move to. That, of course, depends on the nature of the push and pull factors that make us change our housing. For example, an international student that might be living in Shanghai, if they choose where to go to, they are not wanting to go to Melbourne University per se at first. They only know they want to go to a Western university, English-speaking university, and then based on this first step, you make different, more detailed housing decisions. But at some point, once you know, for example, which university, what kind of city you want to go to, as a newbie, you have to pick a central reference point. And this point, if you are a cliche worker with a job, you always have your office as your central reference point. You know how far you're willing to commute, maybe an hour. And so you essentially draw a radius around your central reference point. And then from this central reference point, you add other pieces of logic, if you will. But the central reference point, of course, has been the same for the vast majority of Australians over the last 20 years. We all hold jobs that tend to be centralized in the inner city of Melbourne, of Sydney, of Perth, of Brisbane. And so if we all pick the same central reference point, we all compete for housing in the same centralized area. So we're building ourselves into cities that just have this big house price pressure. Now, with more and more people, Bernard mentioned it just before, working from home, all of a sudden the central reference point, the city, CBD, gets weaker. So we are a bit more free to choose where we want to move to. Once we set our central reference point, of course, we are adding more and more search parameters to our housing decision. Maybe you want a certain number of bedrooms. You most certainly want a certain number of bedrooms because you have 1.8 kids at home. You need a separate study. So you pick housing based on these on this logic. You want to be in a certain school zone. You want to be close to greenery. You want to be close to a certain transport infrastructure. All of this impacts the way where you're looking for housing. And only then, couple of steps down the track, do you actually pick your home. And of course, you pick your home in real constraints of financial viability and of availability of the housing stock right now. What the weakness of the CBD at the moment leads to will be regional growth. And if you think back over the last 20, 30 years, all levels of government in Australia had the explicit goal of decentralizing population growth. But it didn't happen. We are the most centralized country in terms of population in the world, if you disregard city-states like Singapore. We have 2/3 of the population living in our top 5 cities, and we had 80% of population growth occurring in the top 5 cities. I would argue that this is coming to an end, that we're now shifting more towards the decentralized model. And let's think about this. There are 4 major reasons why regional Australia is benefiting at the moment as a housing destination. Well, the first one really is the existing strengths. Local agriculture, local manufacturing in Australia, these are 2 areas that will see growth post the pandemic, and they're of course located in the regions. We want to ensure that we have a safe and secure food supply chain in terms of, if global trade gets into a bit of a halt. And of course, local manufacturing. We realized that we have supply chain sovereignty issues. We had one company in Australia that was able to build medical grade face masks. That's not enough. We had 2 companies that could pivot and start building ventilators. That's also not enough. and we will be pushing for more local manufacturing wherever possible, and this will benefit the regions and of course the outer suburbs of the big cities. Infrastructure will really benefit regional Australia. We have already seen billions and billions of dollars of infrastructure programs in the pipeline being brought forward. The common denominator of these infrastructure programs is that they are aiming at improving the connectivity between this central capital city and the more regional centers. That means that if the connectivity between the regional centers and the city, the big city, gets improved, everybody along the transport corridors, every town along there will benefit, will see growth. And if you lived in inner city Melbourne for 6 months, locked down in a 1 or 2 bedroom apartment with your partner, with a kid, with a dog, with a cat, the idea of low density living appears highly to you. So of course you are going to seek low density living. This is not available in the inner city. It's not available for most in the inner suburbs. All of our big cities have wonderful low density living options available close to the CBD, but they come at a high cost. So the vast majority of us, in order to seek housing, we need to go to the outer suburbs. We need to go to regional Australia, particularly considering that the empty nester baby boomers that are currently living in the middle suburbs in large enough dwellings, that they're not downsizing. Those houses are not entering the housing market. We do know that baby boomers only downsize once there is a medical need for this. Once the home becomes unsafe, then downsizing occurs. And of course, Bernard talked about this a lot, the working from home movement. If we can work from home, and we've proven so with 40 to 50% of the jobs that they can be done remotely, that means more and more people, not everyone, but more and more people will choose to work from home. That means they are freed to actually have the CBD, to have their office tower as their central reference point to the housing decision. So all of a sudden, the lifestyle, sea change, tree change, regional towns, they can actually make a real case to attract population. And one other really big driver for housing decisions in the next decade has to do simply with the amount of jobs or the type of jobs that people have. And if you remember at the last census, you wrote down your job on the little form, and the good people at the ABS put your answer into one of 1,300 categories. That's the number of jobs that officially exist in Australia. Skill level 1 jobs, university level education is required. Skill level 3 jobs. This is the backbone of the Australian middle class type of jobs. We think of them as the largest group in Australia. We think of ourselves as a middle class country. Skill level 4 jobs, low skilled jobs. You need some sort of qualification. Skill level 5 jobs is unskilled labor. So let's look at the status quo as of 2016, as of the last census. Yeah, we're a bit top heavy. We have a bit of a cluster of jobs in the skill level 1 sector. We are not surprised about this because we are, of course, a knowledge economy. Doesn't surprise us. Skill level 3 jobs. We still have a reasonably strong backbone of the Australian middle class, of the Australian middle income jobs, because income, of course, is completely perfectly correlated with the skill level. Skill level 4 jobs, we are also pretty heavily geared toward the skill level 4 jobs. But what does the status quo tell us? Not much. The trend is your friend. Let's look at the net new jobs that we created between the last 2 censuses to actually see the way that the Australian workforce has been developing. And is it not true that half of the net new jobs that we created are skill level 1 jobs? There was no way we could have filled those jobs without a high migration intake. We couldn't have done it. But the scariest figure of this presentation is hiding here in plain sight. 1% of jobs that we created were skill level 3 jobs. We are not creating any new middle class jobs. We're hollowing out the Australian workforce. We might still think of the Australian workforce as looking like a perfect bell curve, we're sure there are a couple of rich folks, couple of poor folks, but essentially we all live middle class lives, have middle class dreams. This is not the case anymore. Australia is divided into rich and poor folks. That means, for example, that the measurement, like a median house price, becomes increasingly murky territory. We more specifically want to look at the high and the low ends of the markets. But maybe, just maybe, this hollowing out of the Australian workforce was just a blip in the data, a little accident. So let's look at the job forecasts for the next 5 years. And nope, much of the same will be occurring over the next 5 years. What this means is that this is the new status quo, that all housing decisions will be made within. That means affordable housing is a larger issue than ever before, and the middle class housing option, that is increasingly difficult. So when you are a property player, you want to be really clear which end of the market you are targeting, because the middle market that you might be imagining is increasingly moving away. It's just disappearing. So to sum up, overall, the 2020 NHFIC has done separate great research about this, about population change over the next couple of years. The pie keeps growing. Australia will continue to see growth, but the growth won't be driven by migration. It will be driven through natural increase, but it does mean that you need to be more carefully when you are looking for opportunities for housing. Of course, millennials, the big millennial generation, finally reaching the family formation stage of the life cycle, that is going to be the biggest driver in the property market over the next years. And of course, we have the decentralization. It's just a matter of scale. We don't know just yet how big the decentralization of population will be, but we can make a very strong intellectual argument at the moment that this is and will actually be occurring, that the regions will be strengthened instead of the smaller, instead of the capital cities. Understanding the full process of housing decision making, actually in times of a bit smaller property market, might be very helpful for property players to actually position their products, to actually understand, could we potentially attract people at all stages of the decision-making process? And of course, the big danger is the last point, the polarized workforce, the hollowing out of the workforce, where we see demand for the high and the low end of the market. That completely changes the way that we do property, because our cliche standard, the same house for everyone in Australia kind of concept doesn't work anymore. So be very, very clear about who your target audience is.
Thanks, Simon. And I'd like to start the Q&A, but please don't be shy. Send in some questions. You've got the experts here. You may as well make use of them. Now, I'd also like to welcome NHFIC's Head of Research, Hugh Hartigan, and Lead Researcher Shane Lee to the panel to join Bernard and Simon. So let's kick off with a big picture question, but it's one that everyone's been wondering about. So where do you see the housing market going in the wake of COVID? Bernard, why don't you take that one first?
Right. Where do I see the housing market going in the wake of COVID? I think it's going to be a little confusing, because the immediate impact right here, right now, as people come out of lockdown, particularly in Melbourne, for example, there's a lot of pent-up demand where people want to buy a property and have been frustrated by the process for the last 6 months or 8 months or something like that. So you're getting a little firework burst of activity at the moment. I also suspect there are specific markets like that, like Perth, for example, as well, doing particularly well. Struggled for many years after the collapse of the last mining boom, but would be going quite well at the moment. Ultimately, it's going to be restrained by two factors, one being the level of net overseas migration significantly dipping in calendar 2020 and 2021. So ultimately that must play through, and also a diminution in GDP. This goes to the issue of the cost of housing. Let's just say that in 2020 or 2020, 2021, the GDP of this nation decreases by 5 percentage points or thereabouts. I don't see how that can do anything other than find its way through to the property market, is my view. And then just finally, this issue of the CBD. Now, I'm a great fan of the CBD and the cosmopolitan lifestyle that we have built for Melbourne, Sydney, Brisbane, Adelaide, Perth, whatever it is. But I just can't see how that narrative of living close together in that inner city precinct is going to work in a post-COVID world. This all stemmed from the work of Richard Florida 20 years ago when he came up with the rise of the creative class. Planners pursued densification. Well, I think Richard Florida's ideas are going to come to an abrupt end with the coronavirus and a new thinking. There's a market for an academic to come up with a new narrative to talk about the rise of middle suburbia and the regions. In fact, I see this as a breakpoint, and that will ultimately find its expression in the change in the value of property in residential and commercial property.
Yeah, Hugh, I'm sure that you've got an opinion on this, considering too that NHFIC recently released a population paper, and Bernard's just touched on migration here.
Yeah, no, look, I think Bernard gave a pretty good solid answer there. I mean, I think one thing I would point out is that it's worth focusing on at the moment on what we know. And what we know at the moment is certainly the part of the market that is probably being more affected is the rental segment. And I think sort of going to Bernard's point, we've seen a huge fall off in net overseas migration. It's pretty unprecedented in terms of what it's doing to sort of population growth. And I mean, just to give you one tidbit, in our analysis, we showed that I think it was around 100 or 120 international students arrived between April and June this year. This compares to 43,000 international students at the same time last year. So really, that is a huge amount of people that, usually would be getting off planes and, checking into their universities and going and trying to find kind of rental accommodation. So I think that's really where the sort of shock is hitting at the moment. We're seeing spikes in vacancy rates and a lot of pressure on rents at the moment. But I fundamentally agree with Bernard's point that, there's likely to be a lot of pent-up demand. And I think, whether that demand's released is really going to depend to some degree on how we contain the virus and, the associated economic recovery. I mean, I think that's absolutely critical. And if we can do that well, and we seem to be doing it pretty well, barring the sort of blip in Melbourne, but, if we can get into next year, there's so much stimulus in the system. And the other point to make is, I went and just checked out, I think we had something like $100 billion injected into the economy between March and now in income support payments. I mean, this is unprecedented in terms of income support and support for households. So really that's obviously supporting people and their ability to pay for their rent, to pay off their mortgage, etc. The next 6 to 12 months are going to be really critical to see if that continues.
Hugh, while we're on the population paper, we've had a question that's just come in, and it's actually asking how confident you are in the projections for a reduction in net migration. They're asking, do you factor in that at the moment we have around 6,000 Australians, many of who live overseas or work overseas, and they're returning to Australia. And the question mentions that already in WA there's pressure on rents as these refugees, if you like, Australian refugees turn home and are looking for somewhere to live.
Yeah, I mean, Shane might have a view. I might hand over to him in a sec, but I think that I think that we didn't really forecast what was happening to net overseas migration. We were really just saying, look, at this stage it's very unclear what's going to happen. We will get some revised figures in the budget on net overseas migration, and the government's also releasing some other figures later on. So I think that ultimately we centred our analysis around the government's changes in net overseas migration. I think it was sort of an 80% fall or 80% fall this year and 30% fall next year. So we'll see what those figures look like. But look, clearly they're going to jump around a bit depending on the outlook, the economic recovery and when we see borders reopening. But did you have a particular view on that element, Shane?
Shane, you're on mute.
I knew I'd do that. Yeah, so returning Australians, even a number of around 6,000, it's relatively small compared to international students. So they're sort of running annualised pre-COVID at about 100,000. Now during the recession, they could probably dip down to 20,000 at probably worst. So what we're seeing is a really big hit to underlying demand through that. So the path out, I think, is really when borders open. So that's the critical issue. But I think rather than returning Australians, it's more international students that are sort of the swing factor in all of that.
Sorry, we'll just go to a question for Simon now. Simon, this goes to, I think, your comments on regional Australia. So prior to the pandemic, we had the bushfires. How will the tension between the more dispersed growth and the pressure on the environment in the coastal zones play out?
Very good question. You do get, so regional Australia at the moment is probably the #1 topic that I'm being asked about. And you do get different narratives from the local population. If you live in a regional center and you think about population growth, some people get extremely excited about their town finally having the time in the limelight. And other people just point out to water pressures in certain areas. So when we talk about regional Australia, we're talking about hundreds and hundreds of towns that are vastly different. The idea is most likely we'll be able to manage more people because we're not doubling regional cities in size. But we're creating regional growth. We can probably provide enough water and enough infrastructure for people. The main problem with regional population growth is that we might see house prices grow, and therefore we might muscle out the skill level 4 workers in the local skill level 4 workers out of the housing market. So that's a big problem that I see on the horizon with regional population growth, if that makes sense. You were just on mute for a second.
Sorry. I was just asking if you see the shift to the regions as being gradual or rapid.
I would still think it's a more of a gradual idea. People are not going to flee the big cities all at once they're allowed, and you only move to a region once housing is available. So it can't just happen at this big surge all at once. It will be a more gradual process, and it's not guaranteed. And mind you, most towns will actually really benefit from a bit more money coming in, from a bit more stimulus occurring through a higher population. That means you have more kind of shops, more kind of retail become viable. And just to keep the current retail alive, retail will be hit very hard. You can ask any Main Street organization across Australia, and they will be very, very excited to have a bit more population growth in their local town.
Okay. And Bernard, this question's come in, and it sounds like it's for you. So what does the shock mean for the relative positions of Sydney and Melbourne versus the other capitals? And there's another follow-on question really is, will we see a move away from Sydney and Melbourne to the safer states?
Well, I think this is a very big question, and it will be tracked through net migration on a state level. The problem with that is that data is always 6 months late. And if you look at the 1991-92 recession, there was significant net out migration from Victoria. There was a story, I can remember that the Times, 30 years ago, people would say that a bad headline on the Age or the Herald Sun meant that there was a boost in migration to places like Hervey Bay. Bad news down south meant good news up north, basically. And you could see the numbers shift in 91, 92, 93, 94. There's about a 4-year period of a net outflow from Victoria as a state as a consequence of the last recession. And the worst quarterly reduction in GDP was 2%. We've had 7%. I actually think that there could be a quicker, a more significant outflow from Melbourne, not necessarily to other states, but also to regional Victoria in due course. If I think of the city that is going to, I think Sydney has got to come out of this stronger than Melbourne. I think that was the case after the last recession. Sydney got nominated as the Olympic city in about 93 or 94, for example. So I think Melbourne has a lot of work to do, and the numbers, the migration numbers, are not going to favour it. I don't think it's going to be like, you know, hundreds of thousands of people, but you don't need many people to make that decision to move from Melbourne to have a big impact on a country town, or in fact a property market in another state as well.
Okay. We've also got a question that's come in asking about the apartment sector. So the immediate impact of the decline in net overseas migration appears to affect the apartment sector. What and when will be the impact on lower density housing? The falls in small and permanent migrants and the eventual loss of migrants not becoming permanent, forming families and households. I think maybe Hugh, can you take that one first?
Yeah, look, I think, you know, clearly the apartment sector is the one that's being affected most at the moment. And I think that, look, the RBA put out a good paper a couple of weeks ago now, which was looking at, you know, in their sort of language, you know, the impact on the particularly the apartment market and the rental segment is unprecedented. And I think that really, you know, what we've seen over recent years is this shock has come at a time when the apartment market was really sort of peaking over the last few years. We had record builds in apartments. That was starting to come off in terms of future builds. But, you know, we've really got this kind of stream of apartments still coming online right at the point at which we've got borders closed and, you know, the people that would usually come and soak up these apartments in terms of are no longer turning up. So we're really seeing a confluence of factors on that sector, which is going to obviously having a big impact. But Jane, did you have any alternative views on that?
Yeah, just on the other migration categories. So students typically come into Australia and then live in apartments for say 3 or 4 years or however long they're studying, and then eventually sort of move into suburbia after they get themselves a job and progress around the citizenship part. So I think the effect there is going to be more sort of longer term. The immediate effect, I think, is going to be on the apartment market and seeing that, but the effect of the drop off in overseas migration on the suburbs will maybe take 3 or 4 years or whatever to materialise. So I think it's definitely more longer term sort of consequence.
We're sort of getting into the affordability realms here too. So I might just ask this question. Could COVID-19 actually improve housing affordability? You know, population growth is down, more people moving to the regions, inner city vacant rates up, which you're talking about, and rents coming down. Maybe Hugh, you could take that first, and then I'd like to hear from Bernard, because that probably is up your alley as well.
Look, it's a good question. It's a complicated one, just given all the factors at play. But I suppose what I would ask, the question I would ask is, you know, affordability for whom? And I think that really that's the critical question to sort of ask at the moment, given that think about the sort of spatial and distributional dimensions of COVID and who it's impacting. You know, if I'm a professional worker, and there's probably a lot of people in this webinar who are professional workers, you know, they're working in companies that are able to adapt. You know, they probably haven't seen much of a change to their incomes, etc. You know, the affordability outlook isn't looking too bad. You know, they've been benefiting from lower interest rates, etc. Shop around and find very good sort of rent, you know, affordable rental accommodation. But, you know, at the bottom end, you know, the workers that are largely affected by COVID, it's your sort of entertainment, your hospitality workers. These are workers way further down the income chain. And I think that, you know, the decision for them is not, you know, what can I go out and buy or rent? It's whether I need to move back at home to my parents' place, or whether I need to kind of tap my mate on the shoulder to see if I can move in with him, given I don't have a job or my job's very uncertain. So I think, look, at the moment, it's so hard to tell. I think sort of, you know, the comments made by Simon and Bernard are good ones in terms of, you know, potentially the longer flow on effects to how cities might change. And you know, if more people move to the regions, clearly that means that, you know, we're probably going to have more affordable housing. But I think we're really in the acute stage at the moment, and they're sort of the, you know, the things that I've sort of been thinking about. Bernard,
more affordable housing?
Yes, in fact, here's an opportunity for me to talk about smashed avocado, I suppose, isn't it? The pandemic, I think, is in fact going to, because it's going to virtually not wipe out, but substantially reduce overseas immigration. If you take that from 180,000 or 200,000 people per year to, I don't know, less than 50 or 30,000 people per year, you cannot but have an impact on the demand for housing. And the demand for housing would then have a strong geographic element to it. It would be specific cities that accommodate a lot of migrants, and specific parts of bigger cities that accommodate a lot of migrants. So that might be the northern and western suburbs of Melbourne, the southwestern suburbs of Sydney, southern suburbs of Brisbane, for example. You can actually see demographically and geographically where those migrants would otherwise have moved to. And there's just less competition, less demand for people. It's extraordinary the extent to which the Australian economy, the Australian property market, has been underpinned by surging overseas immigration, surging numbers of students, surging numbers of overseas visitors to Australia. All of those markets, the driving force, the propellant to those markets has been diminished, and which must therefore have an impact on demand, and which must therefore have an impact on property prices. The bigger question, I think, for investors, developers, people considering pushing around lots of money, tens, hundreds of millions of dollars, is, do you have faith in the future of Australia? Do you have faith that what we did in the 1920s, what we did in the 1940s and the 1950s, that we will do even bigger and better in the 2020s, that we will be in fact seen as a safe haven, and people of means, people of skills will actually want to come here in significant numbers once the quarantine and the vaccine issues are managed. And I'm firmly in that camp. I'm a patriot.
But that also brings up the question, can we learn from the past? I mean, Shane, how have previous recessions affected population growth?
Yeah, so generally, Turi, with population growth, the natural birth rate normally slows after the unemployment rate peaks. So at the moment, it's probably still rising. There's no latest data or anything on it, but usually after the unemployment rate peaks, then the birth rate starts to slow. So I guess the net effect of that is that it does slow population growth, and it usually plays out over a fairly long period. Well, it could be, say, a 4 or 5 year period until the unemployment rate gets back down to a more normal level.
Thanks, Shane. I guess we're starting to run out of time now, so I might just ask one more question to you. We obviously need a bit more research on this. NHFIC's doing some research. What do you think are some of the key things that are going to come up in the future around COVID and issues on population and underlying housing demand?
Oh, thanks, Turi. I'll give a shameless plug to NHFIC's State of the Nation's housing report that's due out by the end of the year. It's some of you may have seen the paper we put out last week on population, net overseas migration and housing demand, and that was really a prelude to a much wider and more expansive report that we'll be releasing by the end of the year. This is sort of directly in line with our mandate, and it will be a report going into a lot of detail, providing projections of housing demand across Australia's major cities and major regional centres. And obviously we're grappling with a lot of these issues at the moment. I mean, if we delivered this report at the end of last year, it probably would have been much easier exercise. But certainly, it's making it a more intellectually interesting exercise at the same time. So we're grappling with sort of really the impacts of the shock, and but hopefully people can tune in and check out that report when we release it later this year.
Okay. Look, I'd like to thank everyone for all the great questions we've had in today. We've come to the end of the panel session, and I would now like to hand over to Nathan Dalbon to close the session today. Thank you.
Thanks very much, Turi. Look, thanks everyone for joining us today and your participation. I hope you found this webinar to be insightful. I would also like to thank our panellists, Bernard, Simon, Hugh and Shane, for presenting and engaging with us today. A copy of this webinar will be available on our website shortly, and if you have any further questions, please feel free to reach out to us. Our email address is media@nfic.gov.au. Thanks everyone, and enjoy the rest of your day.